The housing market is not going to crash. Whoa, big statement. I know. There are literally thousands, tens of thousands of you who want the housing market to crash. But in this video, I'll go over one secret ingredient, which will mean that all of a sudden, everywhere in Australia, it's not like prices are going to come down 30, 40%, not even 20%. Some parts, maybe parts of Sydney, Melbourne, yes, but not everywhere. This is what people don't realize, the secret ingredient. If you want to learn about it, if you want to genuinely educate yourself, then carry on watching. My name's PK and I help people build passive income using the Property Investment Accelerator, using data without needing a $15,000 buyer's agent every single time. Smash the subscribe button. In this channel, we talk about property investment. Obviously, we talk about financial happiness, not to be confused with real happiness. And we also talk about the Australian economy. Okay, so let's get into it. You know that in the previous video, I've tackled this concept of are prices going to drop from 10 different angles, from affordability, from mortgage repayment, like from different angles of vision, because it's not a linear statement. Okay, it's not a linear equation. In this video, here's the first chart I want to share. All right, so what it says is that house prices have increased much faster than rents and income. This is in Australia. So like everyone's saying, how can house prices continue going up? How can house prices not crash when incomes haven't really gone up? So how can anyone afford these things? How can house prices possibly remain at their elevated levels? Let's just look at this chart, right? Like all the way back to 2001. This is indexed, of course, starting at 100. Rents, CPI, wages, they have almost doubled in that time, in the last 20 odd years, but there is no way they have kept up with housing prices. Okay, so the skeptics amongst you will say, well, that means housing prices will crash. The realists amongst you will want to understand why. And that is the why that I'm going to be taking you through for the next 10 minutes. But just on this chart itself, I want to demonstrate that house prices have not been at wages levels, have not stayed at that same linear growth forever. And it's not like they have ever really crashed. That's just the first point, right? So right all the way back here, huge boom, like house prices go up 50% in 3 or 4 years. It's not like there's a crash after this, okay? A really important point. Once again, 2019, huge boom, no crash. Huge boom, little bit of a correction, but nothing in the scheme of things. Huge boom. So just because there's this disconnect doesn't mean, historically speaking, that there will be a crash. Now, what is the reason? What is the reason? And by the way, I'm having a bad hairdo, so sorry about the buffy hair today. I don't use product or anything like that. So let's just zoom in on this. In countries that have built more housing, prices grew more slowly. Okay, so my argument here is that in countries where there is ample housing supply, in other words, private sector and the government build more and more houses to satisfy demand, house prices haven't gone up that much. So let's see Japan, their change in housing stock, has gone up 25% in this time period. I know it's a little bit dated. Portugal, Finland, Greece, Germany, Italy, Spain, all of these countries, they've massively increased the number of houses, supply, demand. The whole world works on supply and demand. If supply goes up and demand is the same, or even if demand goes up a little bit, prices don't go up. Okay, and that's what's happening in these areas, in these countries. However, in places like Australia, Sweden, UK, Canada, Denmark, Norway, what you have is demand completely eclipsing supply. Demand's going through the roof. Change in real house prices has gone through the roof. However, the reason is that there's basically no change in housing stock. It's like the government has literally not built much houses at all. Now let's go to this chart, which evidences this lack of supply in Australia for houses. This is from the State of the Nation's Housing 2022 report from the government. Public housing waitlist. This is from the government, guys. Okay, so this is the degree to which our government has caused house prices to go up despite wages not increasing. Okay, you can see here that let me help you interpret this chart. Back in 2014, the public housing wait list was about 35%, 30 to 35%. That means of all of the public housing out there, 35% more people were on the wait list to get public housing that weren't able to get it. So almost 1 in 3 people who needed public housing weren't able to get it. 1 in 3, it's like public housing needs to be increased by 30% just to satisfy existing demand. Now that did come down a little bit marginally, but now it's all the way up at 40%. So what that means is that the number of houses built or existing from the government needs to almost double to satisfy demand. That's the degree to which supply is undercooked in Australia. Let's take this concept further as investors. Okay, so we know that wages have not kept up with housing prices, and we know that that's because, one of the reasons is because of lack of supply. We know that the government hasn't filled that supply in social housing. So what's the private sector done? This chart explains how detached housing approvals and completions have fared. So basically, private developers, how many new houses are being built by private developers, big developers, small mum and dad developers, okay? So you can see it goes up and down, but most recently, ever since 2018, building approvals, the blue line, and completions are on a low. Now, obviously, in the middle of COVID, ScoMo released that home builder policy, which said, it's massively cheap to buy a house if you're, first-time buyer and all that kind of thing. So that promoted demand, that promoted huge building approvals, but they didn't necessarily all get off the ground. So what you see is that this blue line hiked up and then came all the way back down. So the forecast for building approvals is very low because it's all the way back down. And how many of those actually that were approved were completed and someone actually living in there? You can see that this green line hasn't hiked up that much at all. That is the problem. And this chart explains why, even though so many houses have been approved, why they haven't actually been built. You can see construction costs through the roof. Aluminium doors and windows through the roofs. This was timber prices, by the way. Copper prices through the roof. Metal roofing and guttering through the roof. Plasterboard, insulation. It's all increasing. So even though all these councils have approved all these houses, many of them aren't getting off the ground. You're seeing this with big builders going bust, ProBuild, maybe Metricon, all these kinds of things. So there is even more of a supply problem in so many parts of Australia, right? So even though wages haven't kept up, and I've talked about affordability and stuff in other videos, I'm not going to talk about that now, interest rates and all that. I've covered that, in extensive detail in literally half a dozen videos that just go back to the channel, figure it out. But in this, house prices have completely eclipsed wages. Supply is the criminal to blame. And here's a really good example, right? Adelaide. Adelaide, I've talked about this so many times, the number of houses that clients have bought themselves for themselves, as investment properties in Adelaide. I don't even know how many, hundreds and hundreds and hundreds over the last 4 years. You can see here, okay, supply and demand right here in front of your eyes. So this green line is housing formations. What that means is a kind of a proxy for demand. It's not quite that, but once again, this is from the NHFIC State of the Nation's Housing Report, government official report in 2022. Proxy for demand, housing formations is this, supply additions. Okay, so before 2021, you can see that this green line was higher than this blue line, hence prices started to increase and have just gone through the roof. In fact, Adelaide is the hottest market in Australia right now. In 2022, i.e. this year, you see that there is a lot of supply coming on and demand is, in terms of new people moving to Adelaide, that is likely to come down. But that doesn't necessarily mean prices will come down because there's a built-up, pent-up effect of demand supply in this city. But you can see going forward, supply is keeping up with demand in 2023, maybe 2024, but then you have this kind of half a decade where once again we're projecting demand, this green line housing formations, to completely eclipse supply. So how do you expect How do you expect house prices not to rise when there is so much demand and supply is not meeting demand? Here's another example. All right, so this is not Brisbane, but rather rest of Queensland. That's what the RO stands for. And so it's like all sorts of regional Queensland centres. And we've been buying in spades in regional Queensland. Everyone knows that. Okay, so housing formations, demand. You can see here, once again, this is 2022 here, the timeline's cut off. 2022 is here. So 2021 and before, demand was exceeding this blue line, exceeding supply. 2022, supply did increase. But once again, you're seeing that basically from 2023 onwards, all the way to like 2030s, supply is not keeping up with demand. Okay, so I've demonstrated that yes, you're right, wages haven't kept up with house prices. Is that sustainable? The key ingredient that I've also demonstrated between countries where house prices increase and where house prices don't increase is supply. Supply is that secret ingredient that most people don't talk about, even buyers agents, even like professionals, because they don't know enough about it, okay? So what is supply? What is it doing in Australia? Building approvals did jack up, but completions didn't jack up because of high construction and building costs. And going forward, in many parts of Australia, like I've just demonstrated, Adelaide, regional Queensland, supply is likely to remain completely dampened versus demand. So when it comes to, is there going to be a housing crash? Yep. Sydney, Melbourne, maybe prices go down 20% in many parts, but there are other parts of Australia where that is not going to happen. Now, I'm not going to say that prices are going to go up again and again and again by 20% in Adelaide. That's stupid, right? But there is still lots of opportunity to make money as investors. That is my hypothesis. That is my thesis. You tell me what you think. I'm not interested in selling you anything, right? I'm interested in educating you so you can sell yourself the idea of property investing for the short and long term. Hit the subscribe button, turn notification bell on, leave links below. As always, my Facebook group, more than 16,000 amazing community members. My podcast, I get well over 10,000 downloads a month now on the podcast. Thank you so much. And lastly, I just want to say thank you for being with me here on YouTube. I really appreciate you. I get a few haters and trolls and everything like that, just by virtue of scale these days. But I really appreciate those of you who are really interested in data and consume this and are grateful. My name's PK. Take care, guys. Bye.